Good morning. I wanted to do a quick midweek update on the paper trading account because there were a couple of developments this morning that I thought were important enough not to wait until next week to talk about. So, first, we're going to take a look at AMD after earnings because AMD had a very strong earnings call yesterday. Investors reacted very positively to the numbers. And in the pre market this morning, AMD is trading higher after the market closed yesterday. Now remember, earnings reactions are not always predictable. Sometimes a company can report great earnings and the stock still drops because investors take profits, expectations were too high, or the market was already pricing in good news ahead of time. But in this case, AMD had a strong reaction after earnings, and that's important for us because AMD is one of the positions inside of our paper trading account. So let's take a look at the chart real quick. So this was pretty much price action during the whole entire trading day yesterday. They had their earnings call at 5, and you can see investors loved what they heard. They ended up buying and buying and buying and buying. And this is on the heels of being already at an all-time high. So very interesting. All right, and then we had a little bit of calmness, and then the market opened this morning and did a little bit of buying. There's a little bit going on here, a little selling off, taking profits, and all of that. So I'll be interested to see what the market does in about an hour when it opens. This is going to be exciting to watch. But anyway, so at this case, we're going to take a look into our paper account. So let's jump over here and really quickly show you that as of this morning, we are up on the AMD position for $174.72. It's fluctuating because they're in there buying and selling and stuff. But that's where we're up on the day, which is a really good example of how earnings can move stock prices quickly in either direction. Now, the second reason I wanted to make this video is because this morning I decided to begin adding a little more diversification into our paper portfolio. Right now, most of the growth exposure is still somewhat tied to the technology and AI. We have VTI for broad market exposure. Then we have the SCHD, we have the dividend and value exposure there. And then, of course, we have AMD, SoFi, and Meta. So while we do have diversification already, several of those positions are still sensitive to technology spending, AI sentiment, market volatility, government policy, and overall investor appetite for growth stocks. So this morning, I wanted to begin opening two smaller positions in companies that are outside of the AI and semiconductor space completely. The first one, the first company is Celsius Holdings, Inc. Celsius is the energy drink company, and honestly, I see this product everywhere now. Walmart, Target, convenience stores, grocery stores, Family Dollar, Dollar General, the distribution is massive. What I like is that this isn't just hype. The company is actually growing revenue, expanding distribution, and continuing to build brand awareness. And funny enough, I actually bought my first can yesterday because I realized I own 20 shares personally, but I've never even tried the product myself. So that is that. Now, one of the analysts I follow, he's a chartered financial analyst slash CFA. He focuses heavily on fundamentals and intrinsic value. And he estimated, now let me flip over to his YouTube page so you can see the page. And if you want to like take a look at him, his name is Parkev, and I'm not going to pronounce his last name because I don't know how to. And this is his channel here. So if you want to take a look, he's very good because he'll give you the fundamentals. And because he's a chartered financial analyst, he's giving you the fundamentals on the company, especially if you don't have the time or you don't know how to research companies yourself. He's a good tool to use where you can just jump on YouTube and get his opinion on certain companies. He may not cover the company you're looking at, but he's still good to follow because it's a good learning environment. So he estimated Celsius to have this intrinsic value of $85 or $84 a share about a month ago, while the stock is currently trading in the mid-30s range. Now, that does not guarantee the stock will go there. Intrinsic value estimates are opinions based on financial models and future assumptions, but it does help explain why some long-term investors believe the company may currently be undervalued. All right, so that is Celsius Holdings. I'm going to do it now. So while we're in here, this is Celsius. I'm going to go in here, and because we're in the pre-market, it's 8:30. I have to actually do it this way. I'm going to go into Celsius Holdings, CELH, and we are going to place the order now. What am I doing? I'm push this over here because it's in my way. All right, so I'm going to trade it, and we're just going to grab it where it is. So we're going to open up this position, and we're going to buy about 5 shares of Celsius H, right about where it's trading. I mean, it's saying 34, 33. I'm just going to leave it here. And we're going to confirm to send. So we're going to buy those 5 shares in the open for $171. Okay, there's our 5 shares. It's in the IRA. And when the market opens, it'll fill the order. So that is Celsius H. All right, and so the second company I want to add is ticker symbol ELF Beauty, ELF Cosmetics. And again, this is another company that I personally see everywhere. Their products are affordable, they have a strong customer loyalty, and a lot of people consider their makeup products to be great dupes for higher end brands at a much lower price point. They also have really strong retail distribution. You can find their products at Walmart, Target, drugstores, basically everywhere. So what I'm going to do this morning is open a small starter position in ELF. So let's go to ticker symbol, and I'm going to show you the chart in a minute. I got a couple. And I've been following these two for about a year. They've been in my watch list. And I bought some Celsius and then I sold it. And I've done some trading of it. But it wasn't until recently where I was like, you know what? Yeah, ELF has been on my radar as well. All right, let me just buy the shares first because I feel like I'm jumping around too much. Buy 5 shares of ELF at $61. Is that where we're currently at? I'm going to bring it down a little bit. Yeah, I'm just like that. Yep. And what do we have? That's going to leave us with $786 of buying power. So we're going to have to figure out. Now you can see it's in there, but it's not really doing anything because it has not been filled. Unfortunately, we have to wait till 9:30 for the market to open. So they're going to sit up here under the monitor tab, under working orders. And once again, I'm going to keep reiterating, and we're going to keep repeating things because I don't know if you've watched the other videos, but the monitor tab in your working orders, this is where your orders live. When you put a limit buy and you don't do a market buy, this is where they live until they get filled. They're just considered working. They're waiting to hit your price target because we put them in as limit buys. They will not fill unless our price in here is hit or lower. Then they will fill it so you don't have to worry about overbuying. So now we have that. So let's have a conversation because ideally this buying power, $786, does not leave us a lot in here. So we have a choice. We can either add some cash, which in the real world, if you was investing, or we just wait. But I like to have at least a certain amount of cash inside of the portfolio because you never know when an opportunity is going to present itself. Yeah. All right, let me jump over back into trade. And I'm going to click on here. And we're going to add some cash today. So we are going to add, I'm going to put about, I'm not going to get too crazy with it. Let's add 1,000 in here. Oops. Cash adjustment, add. All right. It's not, if it were that easy, but if you had your bank account, you would just bring more capital in if you needed to. Um, and so that is that. So I want beginners to understand something important here. Diversification does not mean buying random companies. It means intentionally owning businesses across different sectors so that if one area of the market struggles, your entire portfolio is not completely dependent on one theme. AI and semiconductors have been incredibly strong, but there may be periods where those sectors cool off temporarily. Consumer products, beverages, cosmetics, dividend funds, broad market ETFs, those can sometimes help balance out volatility in other sectors. So, this is a really good example of how we slowly build a portfolio over time: broad market exposure, dividend exposure, growth exposure, and now some consumer sector diversification. We're not trying to predict the future perfectly. We're trying to build a portfolio that can survive different market environments while still giving us opportunities for long term growth. So, that is that. And I will see you in the next video. Bye.